Next chapter, next concept is capital gains. Now, as we know already, there are 5 heads of incomes, right? Salary, income from business, income from business or profession, capital gains, house property, and one more is income from other source. Now, capital gains, in simple language, what is capital gain means? By selling any capital asset, if you incur any income, that is what we'll call it as capital gains. So here it is given here, so this PDF I will send it to you. Capital gains refers to any profit or gain or profit, any profit or gain or profit arising from the transfer of capital asset affected in the previous year. So during the financial year, if you sell something in the sense some capital asset, out of that if you are getting any assets, any returns, then it is called as capital gain. Now what is capital gain? What is capital asset? Capital asset, maybe it is something like, for example, you are selling one particular fixed asset. Maybe it may be like your land and building, your machinery, your goodwill, your patents, rights, all those things are called as assets. So capital gains, what they have, there should be capital assets, out of capital assets only capital gains will arise. One more is there should be sale or transfer. When sale or transfer of capital asset will take place, at that time capital gains will come into picture, capital gains will be taken place. So you have to sell a capital asset, and out of that proceedings you have to get some money or money's worth. So that is what we'll call it as capital gain. Now what is capital assets? So it may be any kind of SSC or property, any kind of property held by SSC. It may be goodwill, leasehold rights, building, jewelry, as I told, patents, trademarks, shares, all those things are called as capital assets. It is called as capital assets. And now for these capital assets there are some exceptions. Now work in progress is there, stock is there, so all those things won't come under this particular capital asset concept. Like for example, these are the exceptions. See there, stock of raw material, you have raw materials in your godown, so all kind of stock in trade you have produced and you have kept ready for the purpose of sale in your godown, so all those things won't come under capital gain. So they are fresh sales. When you are selling them, they are the fresh sales. Some assets are for private use, like any some products will be there which are used only for private use. In spite of fixed asset also, it will be for private use, and you will give it to your maybe your legal representative, or husband will give it to the wife or to the children. So these concepts won't come under this capital gain. Then this one more thing you have to see here, agriculture land situated in non-urban area away from municipal limits is also called as this is not called as capital assets. Special bearer bonds, gold deposit bonds, gold bonds, national defense gold, so all these are not called as capital assets. So these are the 4 exceptions for the capital asset. Other than whatever you will get, all we will call them as capital asset. Now we have to see some types of those 2 types of capital assets. There are 2 types of capital assets, capital gains. One is short term capital gain and long term capital gain, STCG and LTCG. Now in general sense it is told, you will arrive at capital gain when you will sell the asset before 36 months of acquisition of the asset. You will purchase, you will sell within 1 year, you will purchase, you will sell within 2 years or 3 years, it is called as capital gain. But there are various conditions for various types of products that we are going to see later. For some products it is 24 months andre 2 varsha, some products it is more than that, 3 months it is, some products it is 1 year only. So those differentiations are there. Now other than those exceptions, all those assets which you hold for 3 years and within that time you will sell it, it is called as short term. More than that it is called as long term. ಅಂದರೆ ಒಂದು ಪ್ರಾಡಕ್ಟ್ ಪರ್ಚೇಸ್ ಮಾಡಿ 3 ವರ್ಷದ ಒಳಗೆ ಸೇಲ್ ಮಾಡಿದರೆ ದಟ್ ವಿಲ್ ಬಿ ಶಾರ್ಟ್ ಟರ್ಮ್ ಕ್ಯಾಪಿಟಲ್ ಗೇನ್. 3 ವರ್ಷ ದಾಟಿ 3 ವರ್ಷದ ನಂತರ ಸೇಲ್ ಮಾಡಿದರೆ ಇಟ್ ವಿಲ್ ಬಿ ಲಾಂಗ್ ಟರ್ಮ್ ಕ್ಯಾಪಿಟಲ್ ಗೇನ್. ಸೊ ದಟ್ ಇಸ್ ದ ಥಿಂಗ್. 36 months duration it is. Some notes are there for this is the exceptions that we'll see later. All exceptions we will see little later. These periods are specified for various assets, as I told. 36 months is a normal rule, and there are some exceptions I told. So these are the things. Immovable assets. Immovable assets means your land, building, all those assets which you cannot move from one place to other place. For them 2 years you have to consider. Less than 2 years short term, more than 2 years it is long term. Listed equity shares, listed in the sense they are registered under stock exchanges, maybe Bombay Stock Exchange, National Stock Exchange. For them 1 year, 1 year we have to consider. Less than 1 year it is, within 1 year if you sell it is short term capital gain, more than 1 year it is long term capital gain. Next, unlisted shares. Unlisted shares means they are not listed in the stock exchange. For them it is 2 years. 2 years, more than 2 years long term, less than 2 years it is short term capital gain. Then debt, mutual funds and all other assets, for them it is 3 years. 36 months or less, in the sense it is long term capital gains. More than that it is short term, less than that it is short term capital gain, more than that it is long term capital gain. So you have to remember these things. Immovable property, special rate of 2 years, 2 years less short term, more than that long term. Immovable property and listed shares. Then one more thing you have to remember is immovable property and unlisted it is 2 years, listed it is 12 months. That you have to remember. Other than that, all shares, all types of shares are all types of assets are considered for 3 years. So 3 years and more it is long term, 3 years and less it is short term capital gain. So these are the things we have to remember. So we have to see 2 types of capital assets, 2 types of capital gain. We have seen the capital assets already. Anything returns you will arise out of short term capital assets are called as short term capital gain, whereas from long term capital assets it is called as long term capital gain. LTCG and STCG. Yes. Now there should be sale, acquisition or compulsory acquisition or auctioning of the asset. In that case only your product will be considered as sold and it is considered for long term or short term capital gains. So main concept what it comes is there should be ownership transfer. Ownership should be transferred from one person to other person, but in these cases there are some exceptions for the transactions. They are not considered as transfer. Here ownership will change, but still it will be considered in the same way. Like transfer of assets, total or partial portion of a family, within the family member there is a transfer, then it is won't called as sale. Assets transferred under the will or gift to the irrevocable trust. Sometimes products will be gifted to someone else or assets will be gifted to someone else, especially to the trust, whereas they cannot be given back. It will be owned by them only. So in that case it is considered. Then distribution of assets in kind. You will distribute the assets of a company to its shareholders in its liquidation. So when company is going to close, sometimes company won't have enough money to pay for the shareholders. When they don't have to pay for the shareholders, they will give some asset. Then at that time also ownership will change, but it won't be called as capital gain. Then asset acquired to succession or inheritance. After the father son may receive or daughter may receive. So these types of things, they are not called as transfer of assets. Transfer of assets by holding the company to a wholly owned subsidiary company. See, sometimes what happens is subsidiary companies assets are definitely they are owned by the main parent company. So inter transfer will take place. Subsidiary company will transfer their assets to their main company. Yeah, so main company holding company will transfer them to the subsidiary, so that is also won't come. Transfer of assets by an amalgamating company to an amalgamated company. See, two companies will merge each other, so or sometimes it will be taken over by one new company. In that case also it is not called as transfer, like Idea and Vodafone, it is together is called as V. Now idea securities are converted into V, but still they are not called, it is not called as a transfer. In the similar way, if your shares are transferred, like for example Bank of Baroda is transferred with the it is merged with the Vijaya Bank and one more bank, where Vijaya Bank is merged with the Bank of Baroda. So Vijaya Bank shareholders will get Bank of Baroda shares, but the ownership will change, but still they are not called as still it is not called as transfer. Then capital asset being at any work of artistic, archaeological, scientific collection, books, all those things to the government university or by the museum. So when you are handing over anything like this of importance, national importance, maybe antique pieces, all those things to the museums or anyone else, to the government or to the schools and colleges, then it won't be considered as transfer. So these are the exceptions for the transfer, what we should know. Now two formats we have to check here, we should know. One is calculation of short term capital gain, how we will calculate. One more is calculation of long term capital gain. This one you have to write it in your book. Here from the sale consideration received, wait for a second, yeah, from the sale consideration received, like for example you will have one particular asset, you have your building, you will sell that building and you will get some maybe 10 lakh rupees. So that 10 lakh rupees is called as sale consideration. Here what happened is you have sold your asset to someone else, so whatever you receive, that is considered as a selling price, that is sale proceeds. We may be calling it as sale proceeds or sale consideration. So from that amount you have to deduct certain amounts. Yeah, so what amounts those are? Three items we are supposed to remember to deduct. One is selling expenses, like for example I told land, I told building. So when you are selling that building, you may incur some expenses, maybe commission you are giving to the agent or registration charges. So all these expenses can be deducted here under the concept of selling expenses. Cost of acquisition, andre to purchase that asset, how much amount you have spent. The amount what you have spent at the time of purchase of these products will be considered here as cost of acquisition. Cost of improvement, after purchasing, if you have spent anything on that, like after purchasing you have improved, like for example in that building you have put some, you have done some floor work, tiles you have put, or maybe you have renovated that. So all these are cost of improvement. So if it is there, that will be considered. So these three things will be deducted from the amount of sale proceeds, that means the amount what you have received. So when you deduct these three, you will arrive at short term capital gain. But there are some things which are considered as deductions. Out of the sale proceeds you are purchasing something similar things, yeah, those will be considered under 54B. So like you sold that building, as I told, one more small building you will purchase, and if it comes under 54B or 54D, it will be deducted here. So after deducting, whatever final answer you will get, that is your short term capital gain. Then we have to see about long term capital gain. Procedure will remain same in case of long term capital gain. So consideration received is there, or sale proceeds, whatever you received, out of that same thing, selling expenses, cost of acquisition, cost of improvement, you will deduct. but the thing is here the value will be indexed, yeah, not the exact value what you will what you have received, but indexed value of acquisition you will get. So the value, that cost inflation index value, will be given to you in the problem. So that information you have to employ, and you have to find out index cost of acquisition, where in short term capital gain this procedure was not there. We used to deduct selling expenses, then cost of acquisition and cost of improvement, but here you have to do. So cost of acquisition into cost inflation index at the beginning year divided by current year, at the time of current year divided by acquiring time, here current year divided by improvement time. So this is what you have to do, this is the procedure you have to follow to